What's up, traders? Ivan here, and welcome back to the channel. Right, today we are taking a deep dive into one of the most misunderstood but powerful concept in smart money trading. And yeah, I'm talking about the elephant in the room, the order block, right? So yeah, now the thing is, not every OB is valid, right? And chasing everyone that shows up on your chart is a gateway to get it's a great way to get wrecked in this market, right? So yeah, before I proceed, guys, apologies. I'm a bit under the weather with flu, so my voice might sound a bit not so good, right? So in this tutorial, in this video, I'm going to show you how to filter the good from the bad using real chart examples and two high probability models that I personally use, right? So by the end, you will know exactly what to look for before entering a trade based on an order block, right? So without further ado, let's jump into it, right? So first things first, right? What is an order block, right? There is different definitions out there, right? But let's start from the top exactly what an order block is. So an order block is the last candle in the opposite direction before a major price move. Some they like to call this an impulsive move. Some they like to call it displacement. But not just any move, right? That's where the difference starts to come in. It needs to have two things, right? There is two things that are required for you to validate an OB that is valid and an OB that is invalid, right? Number one, we need a break of structure, right? Showing a change in market intent. Number two, we need price to create imbalance, also known as fair value gap, right? So why are these two criteria important? It's because institutions, or what we call smart money, they leave footprints when they execute large orders. They don't move in and out of the market in one candle. They scale in. So order blocks, they help us to spot where they likely entered the market, right? So I'm going to show you two order blocks, one bullish and one bearish, right? So we're gonna start with the bullish order block, right? So in a bullish move, the OB is the last bearish candle before price drives up or before there's a rally to the upside, right? And vice versa. In a bearish move, it's the last bullish candle before price declines to the downside. These are the zones where smart money likely entered, and they often act as magnets when price returns to these zones, right? So I'm going to show you just two quick definitions of order blocks, right? So we can clearly see here, right there, right? Yeah, right. So basically, guys, I'm pretty sure everyone watching this video here, most of you guys are in the mentorship, and if you're not in the mentorship and you haven't had a clear teaching or a clear introduction to smart money concept, then you might need to revisit some of those lessons before you can dive deeper what we do here, because I'm not gonna go over the basics, or you should be in a position to identify an OB the way I just highlighted that bearish order block, right? So for someone to be coming up now and say, oh, why did we define that as an OB? Then that's already another section of what? Of learning that you need to go through. So we're talking of, say, institutional order flow concepts. That's the one that teaches you that. So you can see here, we've got a bearish order block. Two of them. We've got one here and we've got another one here. But both these bearish order blocks, they're different. One is valid, one is not so valid, but let me say not so valid, but maybe it offers less probabilities when you're looking, say, to trade from those levels, right? So these are bearish order blocks. Then I'm going to highlight for you bullish order blocks. So you can see here we've got a bullish order block, valid, and we also have let's see, one here. This is a valid, so that's one, and that's two. You see, these are all valid bullish order blocks, right? So you can go to any chart, any time frame that you decide to look into, right? Let me just go here quickly. So this is New Zealand dollar versus euro versus US dollar, right? That's a bullish OB, right? We've got a favorable gap there. This is a bullish OB, and this is a bearish OB right here. That's a bearish OB. Now take note, I'm just extending it. I'm drawing your eyes to this. We're going to explain that shortly. Right, let's go to Brent. Then you can have a look quickly on Brent. You can see there, that's a valid bearish order block, right? It's a valid bearish order block, and I'm on H4. If I go to the monthly chart, let's see what do we have on the monthly chart. We've got a valid bearish OB right there, right? Take note of this liquidity sweep right above, right? So now I've shown you these quick examples of bullish and bearish order blocks, right? Let's quickly walk through both types with these chart examples that I've given you, right? So for a bearish OB, like the one we have here, you need to highlight the last bullish candle before price drops, and there must be a show. Market must show you a break of structure, and you need to highlight the imbalance, right? So we're gonna look at this. I'm just gonna reset this chart here and remove drawing, zoom in, right? So we've got a monthly chart here, Brent crude oil. This is our last bullish candle before the displacement, before the move to the downside, that big drop there. All right, so that's number one. Number two, you need to show the break of structure, right? So where is our break of structure? Right here. That's our break of structure. Why do we refer to this as a break of structure? All right, so that's where are we? Right there. Why do we refer to this as a break of structure? You can see, yes, market is bearish, right? Market is bearish ultimately, but this level has been providing support. So we're talking of, say, the $68, $69 a barrel. It has been providing support, but we've broken that structure to continue to the downside, right? You need to mark the imbalance, right? Where is the imbalance? The last up close candle's low to the next candle that is formed, you mark its high, right there. So I'm just marking the high of these candles, guys. Take note, the high of this candle. Now, here's a classic bearish OB. Price rallies, then drops sharply. The last bullish candle becomes our zone. Notice how price returns to that OB before continuing down. Precision right here. Precision entry opportunities, probably after a liquidity sweep. See, that becomes your liquidity sweep. Engineering short liquidity. That's an example, a detailed example of how you mark, say, your bearish OB. Let me see if I can give you another one. I'm just randomly going through the charts, guys. Just randomly going through the charts. Right. So we're looking at this guy. Right. So the last up close candle, the last bullish candle before the drop, that becomes your OB. Right. The last bullish candle before this huge expansion. Right. Now that huge expansion to the downside, it needs to show a break of structure right there. Right, we see that. That's our break of structure. We need to see number 3. We need to see imbalance. Right, where is our imbalance? Where is our inefficiency? Where is our fair value gap? Right there. That is our fair value gap. Right now, you can clearly see price hasn't returned yet to this OP, but once that happens, you see, once that happens, then that's a high probability bearish order blocks, a valid bearish OB. Right, so now let me show you a bullish OB, a valid bullish OB. Right, look at this one here. That's a bullish OB, but there wasn't a change. There was not a change in market structure. Yes, it's a monthly chart, but if you go on lower time frame, you're probably going to see one. You're probably going to see one valid bullish OB. Let's use the weekly chart. Here we've got a valid bearish OB. Okay, let's go to Euro, Pound USD. I'm looking for a valid bullish OB. Right, we've got one right there. So now for a bullish OB example, we need to highlight the last bearish candle before the rally, right? And same applies as on the bearish example that I gave you guys. We need to see a break of structure. We need to see the imbalance. We have to mark those 3 criteria, right? So for a bullish OB valid, that's one. That's our last down close candle before this impulsive move. You see, this is what we need to see, right? So that's number 1. Number 2, we need a break of structure right there. That's a break of structure. Market now going what? To the upside, and we are looking to buy the market, right, when price returns to our OB, right? Number 3, we need to mark our fair value gap. We need to mark our imbalance right there. That's our imbalance. Look at the confluence that the break of structure and the fair value gap has got. Take note of that, right? So now we continue. So this is a valid bullish OB. Let me see if I can get you the last example for a valid bullish order block. Okay, let's go to right. So we've got the precious metal. This is our last down close candle, right? This is our last down close candle before the expansion to the upside, right? Of course, we know that this thing is bullish higher time frame wise. That's the break of structure, right? That's our break of structure. Where is our imbalance? Right here. That's our imbalance right there. Take note, I'm marking the low of this candle here, the low of this candle, and the high of the last down close candle. We've got imbalance there, we've got inefficiency. Price returns to the OB, regardless, it's inside the wick, and then liquidity sweep below these 2 equal lows. That's a valid bullish order block. We're on the weekly chart. When you go on to lower time frames, you're going to see great opportunities there, right there. You see, this is the level that was broken to the upside. Basic market structure reading, guys. That's basics, right? So now that we've walked through both types with the chart examples, now we go to the next session, which is valid OB. model. Now let's talk about what makes an OB valid. So what I use, I call it structural liquidity pattern, and it has 4 steps, right? You can think of this as your OB checklist. You miss one step and you lower your odds drastically. What does lower your odds mean? You reduce your risk, right? So here's what I look out for. Number 1, liquidity sweep, right? Before the OB forms, we want to see price take out liquidity, like equal highs or equal lows, trendline traps, or obvious swing points. This tells us smart money is collecting orders by wiping out retail stops, basically engineering liquidity, whether it's short or long liquidity. So that's number 1, liquidity sweep. Price trading, say, above an old swing high or below an old swing low, right? So I'm going to show you examples here that I have marked on pound USD. This was a liquidity sweep before the OB was formed. You see? Right there, the X represents liquidity sweep. Below this 1, 2, 3 relatively equal lows. That's a liquidity sweep. Up here, you see right here, this candle here, we've got a liquidity sweep. Though we did not see a big expansion to the downside, right? Now, this is on H4 right here. This is a valid bearish OB, but only for scalping, guys. You use that for scalps, say on 15 minutes when price returns, right? You look at this one here. This is a valid bullish OB. So where is the liquidity sweep? Right there. Internal range liquidity sweep before price expands to the upside. So that's checklist number 1. Number 2, we need to see the impulsive move away, right? We need to see the impulsive move away from the OB that has been what? That has been formed. We need to see an impulsive move, right? This impulsive move, we need aggressive movement away from the OB. No weak rejections. We're looking for displacement, strong momentum, and the creation of a fair value gap, right? Which then confirms real money stepping in, right? So in terms of the impulsive move away, guys, we need aggressive movement. I'm going to repeat, we need aggressive movement away from the order block. There shouldn't be no weak reactions. It should be a big expansion. We're looking for displacement, strong momentum in price, and the creation of imbalance, the creation of inefficiency, what we refer to as a fair value gap. This then confirms that real money has stepped into the market, right? Number 3 on our checklist, the break of structure, right? Now let me just show you quickly, before I get to the break of structure, let me show you quickly what I mean by impulsive move. You can see this candle here. This is a valid bullish OB. If I'm to go back to all those OBs that I marked to say valid, the next candle that forms for a bullish order block, the next bullish candle that impulsively move away, you can see it's aggressive in nature. It's showing a huge displacement. Same applies as this one here. This is a valid bullish OB, and if we were to go through the checklist, you can see that it's meeting number 1, the impulsive move, number 2, liquidity sweep, you see, number 3, break of structure, market going to the upside, right? It's meeting all that. Let me just go to UJ quickly. I think I've got one on higher time frame here, right there. You see, a valid bearish order block. That's a valid bearish order block, right? We had a liquidity sweep right there. Right there. That's our liquidity sweep. Last up close candle, impulsive move. That's showing huge aggressiveness. Price going to the downside. Do we have imbalance? Yes, we do have imbalance right here. See, we've got imbalance. See the three criteria for validating an OB. Change in market structure, right there, we trade below this. Impulsive move, break of structure, as returns to that level, moves to the downside, returns to our OB, liquidity sweep, engineering, short liquidity, boom, market crashes to the downside. We look at it from the other side. That's a bullish OB right there. That's a bullish order block. Valid for that matter. You say valid for that matter. So this becomes your OB, right? And we have the aggressive, impulsive price movement. We have a change in market structure right there from bearish to bullish. We have imbalance right here. We've got imbalance, right? Yeah, of course, if you don't know how to mark imbalance, if you don't know how to highlight it, you might need to go back. I think I've got a free tutorial on my channel here where you can go back to have a clear understanding of highlighting imbalance and inefficiency. It's all one and the same thing, right? So coming back to our checklist, we were on number 3, which is the break of structure. You see, these are all the checklists that you have to do to validate your OB, right? We need a clear break of structure. This confirmed the market is flipping direction. If we don't break structure, the OB is not confirmed. It might just be a pause, reaccumulation or redistribution, not a reversal, right? Number 4 on the checklist. We need to see inducement before the return. Before price returns to the OB, we look for inducement. This can be a fake out, equal highs, or minor liquidity trap designed to bait retail traders before the real money move kicks in, right? So if we look at UJ here, this candle, that's inducement. People were induced to buy UJ at a time when it was trading into a huge resistance area before price moves to the downside. You look at this candle here, that's the inducement candle. People are busy selling at a time you should be looking for long opportunities, right? So those are the checklist that I use personally to validate an OB, right? So I refer to this as structural liquidity patterns, right? Then we continue with the breaker block model, right? There's a variation I sometimes use also, and it's called the breaker block pattern. Now the logic is similar. We still want to see a liquidity sweep. We still want to see impulsive move. We still want to see a break of structure, right? We still need to see inducement. These 4 criteria are very powerful. And the moment you don't have, say, 1 of the 4 or 2 of the 4, that's where you reduce your probability for that trade. Now, with the breaker block, there's a bit of a twist, right? If there's an imbalance near the OB, that gets completely filled, right? I may treat the high or low of the OB as the inducement itself, as the manipulation itself. This works well in markets that are consolidating, where price returns to multiple times to the same zone before breaking away for good, right? invalid OB, right? How then do we say this OB is not it's not valid, right? How then do we say this OB is not valid? Let's take a look at what an invalid OB is so that you know what to avoid, right? Number one, an OB with no break of structure. You see, we are now talking of the opposite. What we look for in a valid OB. If you don't see that, then it becomes an invalid OB, or it becomes an OB that's going to offer you less probability, right? So an OB with no break of structure becomes a less probability OB. If you look at UJ here, we've got one right there, right? That's a bullish OB with no break of structure. For this OB to be valid, we would have wanted it to trade probably above these highs here, right? This OB, for it to be valid, we would have wanted this impulsive candle that moved to the upside, this candle that showed displacement, to trade above these equal highs here. Like here, you see this impulsive move here. We traded above 1 and 2. That's a break of structure. Price continued going to the upside. That makes this valid. This becomes invalid. Number 2, OB with no liquidity sweep. Number 3, OB with imbalance but no inducement. Number 4, weak price movement away, no conviction. If there's no conviction in terms of price moving away from the OB, whether it's bullish or bearish, then your OB is invalid. Yes, by definition, it's an OB, but it's not meeting the criteria. If your OB doesn't check all the boxes, if it doesn't check all these here that I've highlighted, skip it. Because for me personally, it's just not worth it. You see, it's not worth it to take the risk, right? So here's a simple checklist to qualify an OB, right? Ask yourself this: did price sweep liquidity first? Right? You'll be asking yourself these questions. Did price sweep liquidity first? If it did, then that's good. Number 2, did we get a strong impulsive move with imbalance? Imbalance is crucial, guys. Fair value gaps, they're crucial in our definition of OB. Yes, we do get times when we have order blocks that do not have imbalance. Like for instance, this one here, you see, that's a weekly bullish OB, but it does not have imbalance. It does not have fair value gap, but still price returned to that level and pushed to the upside, right? Look at this. That's a bearish OB, right? It does not have imbalance. Number 1, it does not have break of structure. You see, like here, price was this candle here, the one that shows aggressive move to the downside. It should have closed, say, below that change in market structure. You see, price comes back, boom, continues going to the upside. Same applies with the one before that. See that? These are all invalid, right, in my eyes. But when you go to the next lower time frame, you find out that there's actually, say, valid ones on the lower time frames, right? Number 3 on your checklist, did it break structure, right? Number 4, was inducement present before price returned, right? If the answer is yes to all these 4 here, that's a high probability OB. So I'm talking about 1, did price sweep liquidity first? 2, did we get a strong impulsive move with imbalance, right? Number 3, did it break structure? Number 4, was inducement present before price returned to that level, right? So these here, you have to answer yes to all 4 for it to be a high probability order blocks. Right? So I've got some pro tips and trade management stuff that I would like to share with you before I conclude. I've got a few tips that I've learned from experience. Always use higher time frame to find your OBs. MWD. Sorry about that. MWD, monthly, weekly, and daily. These are your higher time frames to use to find OBs. Use lower time frames for your entries, H4 and H1. All right. Combine OBs with other smart money concepts like liquidity pools, fair value gaps, and internal structures. Right. Don't enter blindly. You must wait for confirmation, guys. Wait for price to react from a zone. That's how you use OBs with confidence, not hope. You don't need to hope when you enter a trade based on smart money concept, right? So yeah, if you got value from this short, it's not that short, it's about 30 minutes. If you got value from this, make sure to hit the like button and subscribe so that you don't miss future breakdowns of price action, right? And if you've got any questions, drop them in the comments or let me know if you want a full trade breakdown using OBs, using live market, right? So just drop in the comments there, engage with me, and then we can help one another. So as always, guys, trade smart, stay patient, and I'll see you in the next video. Peace out.